Hey guys, I've been looking through the charts this morning and I've kind of come to the conclusion that 15.6k, which is the place we bottomed out just a few days ago, isn't actually just a random support zone. I previously have mentioned on Bitcoin that I think Bitcoin will probably trend downwards towards that 13.8k weekly chart level. However, now that we have this support zone here at 15.6k, that does force us to question that theory to a certain extent, of course. We do also have a death cross incoming on the weekly chart with the 50 SMA and the 200 SMA, which we've never seen before. And so there's quite a few things we need to look at in this video on the weekly chart specifically. Let's get into it, guys. And before we get into it, actually, I will give a quick shout out to the Wolves Crypto VIP. We've released our results for the VIP group. You can find that in the pinned comment below. And also, if you're interested in joining up to the VIP group and getting trading signals, you can do that as well. Anyway, let's get into it. So before we take a look at the weekly chart, which of course is the main part of this video, we need to go over a quick few things for Bitcoin. Now, Bitcoin had an hourly chart descending resistance line, which formed something similar to a descending triangle structure, or we thought it was at least. I guess it's not really a descending triangle. It was almost actually a bearish pennant formation. But regardless of that, we broke to the upside, and we broke to the upside in a period of very high volatility caused by another fundamental event, and that was, of course, this massive wick here. I'm just going to point to it here, that we saw a 1,000 USD wick all the way above 17.6k, which of course was the June low. But you know, that was easily and quickly diminished and easily and quickly vanquished. We came back down, and now we're forming a resistance support flip on that resistance line, and so that's kind of bullish. But at this point, we have no real indicator to assume that this would go further upwards yet, simply due to the fact that we're at a risk here of forming a M formation, which is a double top pattern. So once we break that level at, say, 16.9k, break into the 17k region, then we can start to look at higher targets like an actual proper retest of 17.6k. But at this point in time, the hourly chart is a little bit indecisive. I think that upside wick there kind of threw a lot of people off. The daily chart's the same story. Not really too much to talk about on the daily. But ultimately, I do want to talk about Ethereum just briefly as well. Ethereum has formed a descending channel formation. And we've come back down and we've seen a resistance support flip. We dropped this resistance zone here between around 1,300 and around 1,250. We dropped down and we came up, back up, and resistance support flip. And now we can expect a retest to the bottom of this channel once more at some point over the next couple of weeks, most likely. Again, and one more thing I want to say before we get into the weekly, is S&P 500 has been very interesting. S&P 500 has managed to actually come up and flip this red rejection zone to green, meaning that now it's a support zone. And the S&P 500 at this point in time, we have kind of reasons to believe that we'll come back up and retest this yellow line. Now, I don't personally think the S&P 500 has bottomed out. I think we'll go further down on the S&P 500. And the reason for that is quite clear. If we go over to a longer term S&P 500 chart and we can bring up, say, you know, the monthly chart on this chart here. Let's go ahead and do that. And then we bring up a overlap with something like, one second, interest rates. What we can see is that, generally speaking, the S&P 500 actually does not bottom out, right? It doesn't bottom out until interest rates have started descending. Okay, so all these pink lines are indicative of major S&P 500 bottoms in the price action. And you can see just lining those up with the orange line here, which is the interest rates in the United States of America. Generally speaking, on all of these occasions here, not generally speaking, actually, precisely speaking, we've never seen the S&P 500 bottom out on a major bottoming zone until interest rates have started decreasing. And of course, interest rates are still rising here. So I don't suspect the S&P 500 to be bottomed out. And that's based off of every single piece of historical data we have for the last 40 or 50 years on the S&P. So I don't think the S&P 500 is bottom. And that's one of the reasons why I don't think the DXY is topped either, me personally. Now, it has lost a lot of support. You know, all of these dotted lines here are miniature support, previous support zones that have now been flipped resistance. We've lost the bull market support band, which is the first time we've lost the bull market support band since basically, you know, June 2021. So, you know, there's no doubt that we're seeing an upswing in the markets here. But just going off historical data, it's very hard for me to believe as an analyst that the S&P 500 has bottomed out. It's very hard for me to believe that the DXY is topped. That's just me personally. And that is just looking, it's not actually me personally, it's actually the data. That's what the data says. Historical data does suggest that because we haven't seen anything else happen ever, right? So we can assume that the traditional markets have not bottomed out yet. Now, unless this is an occurrence for the first time, you know, first time ever, maybe, you know, we're seeing an anomaly here. Maybe we're seeing, you know, this is the first time, maybe the trend is breaking, maybe the S&P 500 has bottomed out, but that's not what the historical data suggests. So at this point, what I'm looking at really is this downtrending yellow line. If we break that downtrending yellow line in the S&P, that's when you start thinking, okay, maybe we're seeing the bottom confirmed here. But at this point in time, yeah, as I said, I don't think it's bottomed out. But ultimately, that's not relative to Bitcoin, because we've talked about this quite a lot in the past. S&P 500 bottomed out topped out in January. Bitcoin topped out in November. By the time the S&P topped out, Bitcoin was already down 40-50%. So Bitcoin and the S&P and Bitcoin traditional markets in general, they're connected, but they're not actually completely tied together. They can move separately. So that's why I think that even though I don't think the S&P 500 bottom is in, I do think that Bitcoin will bottom out quite soon. And I think Bitcoin will be up significantly by the time traditional markets have bottomed, right? I think Bitcoin acts as something that moves first, right? So it will bottom out first, it will top out first. That's what Bitcoin is, in my opinion. So regardless of all of that, because I do think there's a lot of discussion going on that in the community, and I'm interested to hear you guys' thoughts on that. But regardless of all of that, what we need to look at here is Bitcoin in the weekly chart. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megaworld Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. And first and foremost, there are lots of things to look at, okay? And we're going to start deleting a few of these lines here, narrowing it down quite a bit, because as I said, we do have a lot of things to look at here. And namely, I want to start off by looking at this downtrending yellow line. Okay, downtrending yellow line on the weekly chart stemming from the January 2021 low on the weekly candle close through to the wicks here in May and June 2021, and then through to the wicks in June 2022, and also the candle close here. We've got major support here on this diagonal support line, and on top of that, for the first time ever here, I'm zooming back and I'm looking at the weekly chart and I'm thinking, okay, we bottomed out on the weekly chart at 16.2k on the weekly candle close. If we scroll back in history at 16.2k, we can see that 16.2k was actually the rejection zone after the peak in 2017. We came back up, rejected off of there. So it is a support zone. It does have historical prevalence. So there is a decent chance, okay, I'm not going to say it's likely, I don't think it's likely, but there is a decent chance here that Bitcoin might actually bottom out in this region. I think people need to be open to that, because when you think about what Bitcoin did to get to this region, okay, think about this for a second. The DXY was dropping. The S&P was going up. All the markets looked good. Everything was pumping. Bitcoin only really dropped because of FTX, okay? Yes, I think it would have dropped regardless, but what actually happened was FTX. That's why Bitcoin dropped, okay? So, if you think about the second most major exchange in the cryptocurrency market collapsing, and we saw a drop down to 16k, what's going to take us lower? I think in the charts, there is evidence to say we go lower, but what would actually be the catalyst for that? What else has to happen? There has to be something pretty big. If the second biggest exchange in cryptocurrency's history collapsing drops us down to 16.2, what's going to drop us down further? Is it going to be the first biggest exchange collapsing? There has to be something that could really drop us down there. I mean, natural price action is all well and good, but when you're talking about major movements that go against the rest of the markets, it's generally catalysts driven by fundamentals. So I think there is a case to be made that Bitcoin could bottom out here. Regardless of that, I think our buying plan is going to stay the same. Okay, our buying plan over here, 50% buy at 17 to 18, that's already been triggered, and then 50% buy at 13 to 11, or a weekly close above the bull market support band, which is at 21k, okay? I'm going to leave that as it is. I don't think there's enough evidence to change that. The last thing I want to be doing is buying up here at 16k, and then we do actually drop down to 11k-ish or 13k-ish, as I suspected, and we have no more capital to buy with. I'm not going to put myself in that position. I'd rather stay conservative, and I think the conservative option is either wait until lower prices or wait until a break to the upside and confirmation for a renewal upward trend, okay? So, but I just wanted to point that out. There is support here at 16.2k, so don't think that we're just kind of drifting on thin ice. We're actually not. There is considerable support here. Yes, we have lost a few major regions, but I do want to really point that out. Now, Another thing I want to look at here is the RSI downtrending line. That is very important on the weekly chart. I do recommend everyone should go ahead and draw that up. If we break that to the upside, of course, we will be seeing a substantial move to the upside, and that move will most likely take us above the bull market support band and trigger our buying plan. Whereas if we see another rejection, retest and rejection, we can expect to go downwards towards these lower levels here at 13 to 11K. All right, so that's very interesting as well. One more thing I do want to bring up in this video is the def cross on the weekly chart. It is about time that we start talking about this, okay? Because yes, it's not confirmed yet by any means. Okay, it's still a very long way away. In fact, this def cross would probably only take place, assuming that we stay downwards on Bitcoin. This would only probably take place, let's just go ahead and get a rough guideline here by using these lines. Would probably only take place in the start of January, so early 2023. But I do want to note that, def crosses are bearish. They're not bullish, but they do generally get priced in. So before you see the def cross actually take place, you do see drops. And we saw that materialize with the 3-day def cross just a while ago there. But, what I want to note is that this has never happened before. This def cross on the weekly chart has never happened before. So we have to be a little bit wary here. We have to be a little bit cautious. We don't really know how that's going to react, whether it's going to be super, super bearish or whether it's not going to matter because the weekly chart's too high of a time frame. But we do need to understand that, we've gotten close to it in 2015. It's never actually happened. If it does play out, which we are at risk of now, right? Those lines converging pretty quickly. If it does play out, we could be in for a final capitulation. We'd have to wait and see. Now, again, I'm a believer in the 4-year cycle theory, and the 4-year cycle theory says Q4 bottom. So the fact that def cross will take place in January, and you'd assume it lead to a drop in January, I think I'm a little bit skeptical. I do think we'll narrowly avoid it, and I do think if it plays out, it would be likely to be a fake out of some sort. You generally do see major things like that on Bitcoin, with longer time frame def crosses, etc. You do see fake outs quite a lot, because the thing of longer time frames, and I speak about this a lot with something like the weekly RSI. Now, weekly RSI, people are looking at this, they're saying, oh, look at that bullish divergence on the weekly RSI. Let's zoom in so you guys can see it. There is a clear bullish divergence here on the weekly RSI where the price is forming lower lows and the RSI is forming higher highs. But, people aren't really sitting here on Bitcoin and making decisions based on the weekly chart too often, right? Usually they're zoomed up in lower time frames. And if there's a, bullish divergence on the daily RSI, that's going to matter. Weekly chart, it's a long time. Each candle represents 7 days. For an RSI divergence to play out on the weekly chart, we're talking about, the last 5 months that's been forming. People don't have attention spans that long. You have to remember that price moves based on people reacting to situations. Okay, people are zoomed up in the short term. They're reacting to things, in the present. They're not really looking at the weekly RSI and thinking, oh yeah, this is why I should buy or sell, because it's too long of a time frame. Buying or selling based on anything on the weekly chart, other than candle formations, in my opinion, because they're very important, is kind of like you're playing a very, very long-term ball game. So I think focusing too much on that is a little bit of a detriment to you as a trader or an investor, but it is there, right? We do see bullish divergence on the weekly RSI, and if we go to the 3-day chart, we do see bullish divergence on the 3-day as well. And this is what I mean, right? So there are bullish divergences across the board, and we are on support, so we do need to consider that, hey, 16.2K, or more specifically, if we're going on the daily chart, actually down here at 15.6K, it could hold. It could hold. We have to understand that. We have to be very, very aware of that. And I think that argument I made before in this video that, with all of the stuff, with all of the crazy things that's been going on in the last week, that only took us down to 15.6K. What could actually push us below that? I'm not counting it out by any means, right? TA does suggest we go lower. Just saying, we have to consider that could be the bottom here. And I think when people least expect the bottom to be in, that is when the bottom's in. And I do genuinely think that not many people expect the bottom to be in now. So it is something that's worth considering. I'll repeat myself for the 50th time. Do I think the bottom is in? I don't see any evidence at this point in time to suggest that the bottom is confirmed. I don't think it's confirmed. I think it could be in. We'll see. It is Q4. I'm a believer in the 4-year cycle theory. We have seen a major capitulation event, which generally triggers the end of a bear market. We'll see. We'll see. But that buying plan's not going to change. I'm not convinced enough to change the buying plan. I do still have that buying plan, as I said before, between 11.5 and 13.8K. So let's see what happens, guys. I just wanted to point out in that video, there's a lot of speculation going on about like how there's no support here, but there actually is. So that's something that I'm kind of debunking in this video. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.